I'm Charlotte McLeod with investingnews.com, and here today with me is independent analyst Ted Butler. He writes for Ronnie Sturfla's In Gold We Trust report, Peter Kraut's Silver Advisor, and David Morgan's The Morgan Report. Thank you so much for being here. Great to have you once again.
Thanks for having me, Charlotte. Again, I'm really looking forward to talking silver, gold, and platinum with you today.
Really looking forward to it as well. We've got a lot to go through. And we're catching up on our last conversation about 3 months ago in July. You were telling us at the time that this was silver's moment. We'd gotten through that important $35, $36 level, and you were pretty confident that we were going to keep going higher, which of course we've seen that happen. So I want to start by checking in with you on silver. You expected this move, but did you see it happening quite so fast? How are you feeling?
Well, I think we're all happy to see silver finally within touching distance of that $50 level. I didn't actually expect it to happen so quickly. In fact, I think it's a bit concerning how quickly it's happened in terms of the sustainability of the rally. However, I do think that we will eventually break through $50. I'm not sure if it's going to be exactly in this cycle, in the near term at the end of this year. There might be some sort of high-level consolidation, as David Morgan calls it, or some kind of healthy correction. But ultimately, it will break through. And that's going to happen because when it does cross 50, mainstream media coverage will begin. And that's where we're going to start to see the generalists come in. We're going to start to see the public participation phase, as we call it in this cycle. And that's going to all pile up on top of the institutional demand that's already starting to build up. And one of the technical reasons why I actually believe that it's going to break through the $50 level is that the silver market has now entered what we call backwardation, which is a phenomenon where the futures price trades below the spot physical price. Normally, this results in an overwhelming demand for physical. That could take the form of SLV investors standing for delivery, whether that be the industrial players who are notoriously resolute, or even, billionaire whales from India. And we'll get to India later. But in that event, which is already playing out, by the way, silver prices and premiums will continue to increase, maybe even dramatically, as the news of insufficient physical silver transmits itself through the market. So that's where I'm at the moment. There's a lot of other reasons why I'm excited in terms of the gold-silver ratio. And that is obviously at the 80 mark, that's still quite high for historical standards. Typically, the gold-silver ratio averages, over the last century between 50 and 60. And basically now with the gold price at 3,800, if we take the midpoint of that gold-silver ratio, which is 55 over the last kind of 100 years, we're talking about $60 silver. But that's just reverting to the historical mean. So silver, based on the gold-silver ratio, despite its rise, is still historically undervalued. And if you even want to take it further than that and look at the gold-silver ratios of 20 to 30, back in the bull markets of 2011 and 1980, we'd be looking at $120 silver, or even maybe $200 silver. So the idea that this bull market is over is a fallacy. I would exercise caution because I do believe we're due a correction, but I'm very happy with silver's performance so far year to date.
Lots of directions for us to go in there and a good summary of what you see going on with silver. I want to ask a little bit more about maybe the gold-silver ratio angle and the relationship with gold for silver. One thing I've been asking quite a bit lately to the experts I've been speaking with is, okay, we had this rise in silver. How much do you see being related to silver-specific factors, and how much is more silver finally starting to follow gold higher? How do you see it?
I think it's a combination of the two, Shal. I really do. I think gold's performance has been unbelievable year to date. I do think we're getting to the point now where gold could be... I think gold is in the public participation phase now, the actual gold price itself. I think there's still a lot of room left for mining stocks. We can get to that later. But really, it's silver's time to shine. I do think, like you say, that the factors on the demand side, we already know that silver's in a supply-demand deficit and has been for the last 5 years, to the tune of, I think, the equivalent of 1 year's mine production. But in terms of the factors, I think India has been a big catalyst in this. I think when we spoke in Boca Raton, Charlotte, you might remember that I mentioned that Indian demand was one of the big drivers I was watching. And in part, that was due to the fact that 40% of the entire country's retail investment demand went into silver ETPs in 2024. So that's the entire country, the retail investment demand into silver ETPs, not gold, silver. And that trend has actually continued further into 2025, with Indian silver imports now sitting at all-time record highs, right? And that doubled from September to August, during that period. And as we know, the silver price went from $37 to $48 in those 2 monthly periods. And I think that Indian demand had a great deal to do with that. In terms of other catalysts, I do think that we've had, if you look back to the rate cuts that we had in September, another big catalyst was definitely the fact that Jerome Powell decided to cut 25 basis points. I think President Trump will be very happy with that after all the pressure that he applied on Jerome Powell. And now, last time I checked, I think investors were pricing in an 86% chance of another 100 basis points worth of cuts by July next year. And as you know, as I mentioned in the interview last time, silver produced an average of 332% after the first rate cut on a cycle began since 2000. So with that in mind, I totally expect that rate cuts will continue to cause the silver price to rise if we see more of them later this year.
I do remember talking about India in that last interview, and definitely the Fed rate cuts have come to the fore since we've been speaking. Any other important silver catalysts that you are watching heading into the future?
You know what? I think one of the big ones, in light of the kind of geopolitical tensions that we're living in right now, is safe haven demand. And many people associate safe haven demand with only gold, which is true to an extent, but silver really does perform well in instances of geopolitical turmoil. Whether it's Israel-Iran situation, whether it was Russia-Ukraine, historical events going back to, the 1980s or whatever. There's definitely been a link there between the silver price and warmongering. And obviously, when you've got the new Secretary of War, Pete Hegseth, saying to ensure peace, we must prepare for war in his big speech the other day, that could be quite foreboding in light of the US strikes on Venezuelan boats in the Caribbean. So you've got all of these different trends. In the same time, you've got the EU. They just put out this Rearm Europe program for 2030. It was introduced in March, and we wrote about it in the Gold Trust report. It basically is designed to mobilize a colossal 800 billion euros over 4 years to finance the European defense readiness. And let's not forget that actually in the height of the World War II in 1943, we've got this on record that the US consumed 200 million ounces of silver in that year. Now, at present, we estimate that it's somewhere around 40 to 50 million ounces a year based on the dots that we're connecting, because a lot of that is guarded as a secret, that military information. But ultimately, it wouldn't be far-fetched to see that 40 to 50 rise, not towards 200, because we're not at that level yet. But silver is a critical metal. It's absolutely essential for military applications. And so if we see these tensions continue to rise, Charlotte, we could see the silver price rise from safe haven demand, but also as its demand for military applications rises too.
Yes, I think that's a really important one to go into. So thanks for touching on that as well. I want to look a little bit more closely at the price. So you do see silver getting past 50 and beyond, but you mentioned 50, maybe not in this current cycle that we're in right now. So I'm wondering if we can go into that a little bit more, because of course, people are excited to see silver move, but we can't forget that volatility angle that's inherent for silver.
Right. Yeah, well, silver's volatility is an opportunity, as I think Peter Kraut, my colleague, actually says. But up to now, we haven't really seen that much volatility. This rise in the silver price has been quite clean and quite uninterrupted. And what that means is that until we get that volatility returning, the silver price could continue to maraud through the 50 level. I do feel that psychologically it is a limit that of a resistance in people's heads. But when I say it's not going to cross in this cycle, I don't mean in the next year. I do believe it will probably cross early next year, the $50 level. But actually, I think it would be healthy if there's some kind of high level consolidation around this sort of 46, 47, 48 level, as a kind of, as opposed to going directly in a straight line upwards, sort of staircase upwards. It would be a lot healthier for the silver price long-term sustainability to stay there. Of course, there is obviously the downside risk too. Now, we can't deny that, and it's important to note that all of these industrial applications, which is now a big part of silver demand, that just got a whole lot more expensive, right? So on the solar side, the cost of, implementing silver into solar panels has basically doubled, from, $25 a few months ago to now near $50. So that could have a short-term impact. And, as more data is released into the market, we'll see that. But that doesn't change my long-term perspective on silver, that we're still in a supply deficit. The damage was already done from the mine production perspective, because it takes 10 to 15 years to get a silver mine from inception to production. And you think about all the different jurisdictions where, silver is mined, and you look at like places like Mexico, being the main one, and silver production has been falling in Mexico over the last few years quite considerably. So the idea that, it's going to stop below 50 is not a reality for me. I really do believe that it would be a pause and not a meaningful decline.
Yeah, I think that helps to elucidate your thinking there. And I want to talk a little bit more about silver beyond 50, because you're mentioning, okay, this is the level where you see the general public get more interested in silver. They start to come in. And I'm wondering what more you can say about what we might see there as we get into kind of that blue sky area that we haven't been before.
Yeah, that's a great question, Charlotte. I think typically when there's a breakout and when a stock or a commodity price heads into uncharted territory, it does continue to rise. And that's because there's no more strings attached. The bets are off. And so I wouldn't be surprised to see it, if the momentum is good, that the silver breaks its way through 50 and continues to maraud forward up to that sort of $100 level. Simply due to the media attention that would come into the silver market. You're going to have people who haven't even heard about silver in their lives, have completely forgot that it was even an investment, didn't even know you could invest in it. And the generalists are just going to pile in. And silver is such a tiny market relative to gold. I think the market cap of silver is like 20 billion, the silver market compared to gold, which is, multiples more than that. So it wouldn't take a lot. For, you think about all the money sitting in money markets right now. I saw a stat the other day that had been revised to from 5 trillion to 7 trillion. If a tiny percentage of that makes its way into the silver market, there's going to be these disproportionately large returns. And as we know, the London market right now is a choke point. You've got very, very low levels of physical silver in the LBMA inventories. A lot of that went across the Atlantic to the US earlier this year. But I really do believe that those inventories could continue to be drained. And when the generalists come in, that will be the straw that breaks the camel's back, if you like.
So big implications for the silver price, but for the silver companies as well. And I'm wondering if we can take a look over at the silver stocks. Of course, people typically look at them because they want to see them outperform silver itself. So I'm curious what you're seeing so far from silver companies in terms of their performance compared to silver, and where you're focusing right now among the companies.
Yeah, so I write for the Peter Kraut, and we work on the silver companies for the Silver Advisor service that we provide. So essentially, I'm very happy with where we're at the moment. I do believe that a lot of us are maybe 150%, 200% up, And that can be very tempting to look at those gains and think, you know what, I'm going to take some gains. I'm going to trim. I'm going to take a third of my profits, maybe even half. I maybe even sell the whole thing. I'm not going to be doing that because I see the long term rewards of this silver bull market. Yes, there will be corrections. Jeff Clark, one of our colleagues as well, pointed out in his recent speech at MIF that sometimes these corrections can be up to 20% intra bull market, in the silver and gold mining stocks. So up to now, we've kind of seen maybe 5% corrections, maybe 7% corrections, depending on which stocks you're looking at. But there's probably going to be more of that. And if that's not what you like, if you don't have the stomach for that, then maybe this industry isn't for you. But when you understand the fundamentals, when you understand that these companies have paid down a lot of their debt and they're in a better financial position than they were in previous years, when you consider the quality of the management teams that are out there, and you consider that mergers and acquisitions are picking up finally again, and we're having sort of record financing months such as we did last month, for mining and gold and silver miners, I think we're in an excellent position. And it's really depends on your risk tolerance as to whether you want to take profits now or hold on for the ride. But in my opinion, the ride's going to continue for, 1 or 2 years at least.
And it also, I think, depends on yourself where you want to focus in terms of the companies, the bigger ones or the smaller ones. Where do you see the most potential at this point in terms of share price gains?
I think obviously the highest potential and the highest risk simultaneously lies in the exploration plays. Depending on whether you come in at it from a wealth preservation perspective or a speculation perspective, you're going to have a different perspective. I do believe that as a young guy, I'm 24 years old, getting on 25. I do believe that what do I have to lose, to speculate in these exploration companies? So I've got a longer time horizon, so my risk tolerance is higher. If I were an older person, maybe 70, 75 years old, I'd be thinking more about wealth preservation. I'd be thinking more about royalty companies, and I'd be thinking about quality that would allow me to maybe have a dividend from my pension, from retirement, your IRA, whatever. So it depends. But for me, I'm looking at the exploration companies. I think the opportunities below 500 million market cap are excellent. Obviously high risk, so be careful. But if that's what you're interested in, we cover the best for the Silver Advisor on our service. So please check that out.
Okay, very, very well put there. And we've talked about silver. We want to take a look at the other precious metals as well. And where I wanted to move over is platinum. So this is another one that we talked about a few months ago during that other conversation that we had. And you're mentioning the potential that you were seeing there. It's another one that has been in deficit for years, and we've seen the price really moving again since that last conversation. So I'm wondering if you can start by reviewing what is behind this move in platinum, where it feels like it's been building for quite some time.
Yeah, no, it's one of my favorite stories, I suppose, in the commodities over the last few years. Many people benefit from the uranium bull. Many people got in on gold really early, me included. But platinum was one that at the Morgan report we called when it was at $950, and we're very proud of that. It's now at $1,600, so we can't say that it's the stone cold bargain that it was at that price. But I do believe it's good value, and one of the reasons I believe that is because of the existing supply deficit, as you point out, Charlotte, and actually that is being exacerbated at this point in time. Specifically, it was about 968,000 ounces last year, which is about 15% of the annual mine production. And many of those demand drivers, they're kind of ancillary, like electronics, dentistry, things that you wouldn't really expect. But the main one is catalytic converters from the automotive industry. And that's responsible for about 43% of the total demand. And to quote the great Rick Rule, he said that the amount of platinum used in a catalytic converter is tiny compared to the overall vehicle price. Just a couple $100 in a car costing well over $150,000. So that kind of price inelasticity means that even if platinum prices were to double, it would barely move the needle on the final vehicle price. which is why that demand category is so solid. So in the catalytic converter demand segment, platinum kind of has a price floor. But actually, what's interesting, Charlotte, is that jewelry demand, particularly from China, has been the big demand driver in the price rise of late. And I think if I remember correctly, it was 151% year on year that fabrication has increased in China's platinum jewelry industry. And that's been helped by the relatively expensive gold prices relative to platinum. And ultimately, those two demand drivers of jewelry combined with the catalytic converters are coming together, converging to exploit a dwindling supply. And 70% of that platinum supply is located in South Africa. Everybody knows that in South Africa, they've had problems with load shedding in recent years, which is basically due to a dependence on their dilapidated coal-powered power grid. And production in South Africa of platinum has fallen about 15% from its peak in 2021. It fell year on year last year as well. And so that combination of, an insecure energy supply and also the corruption, also the crime, also the high levels of bureaucracy in South Africa is making it quite difficult, really. And the interest in platinum hasn't been, historically strong. And now we're seeing the effects of that in the supply, which is being exploited by the demand. So supply demand is excellent. And also, as I'll get into later, it's historically undervalued relative to gold, platinum as well.
Right. This is where I was hoping you would go with this. I was wondering if you could give some context on the platinum price, because of course this year we look at it and it feels like it's made a really big move. But from a historical perspective, it's lower than it has been before. Usually it's more comparable to gold. So how should we situate ourselves when we look at the platinum price?
Yeah, so basically through the 1990s, before I was born, and the 2000s, you'd need at least 1 ounce of gold to buy 1 ounce of platinum. And at certain times, like in 2000, 2008, you'd even need 2 or 2.1 ounces of gold to buy 1 ounce of platinum. Obviously, after gold's relentless rise to 3,800, I think even nearly 3,900 today, that dynamic has now flipped. In other words, you'd need, I think roughly 0.4 of an ounce of gold to buy 1 ounce of platinum at today's price of 1,600. That's about right, isn't it? So that's actually pretty close to the most undervalued platinum has been relative to gold for at least 35 years. And the exact bottom in that platinum gold ratio came in April of this year, around 0.28. It's now at 0.4. So it's still a lot of value considering that it's been, up at 2.1 at its peak and averaging, 1 at least. So if you're thinking if gold stays at these levels, which I do believe it will, like as part of this high level consolidation that I think we will see, because every dip in gold, institutions are buying, ETF holders are buying. It's the most robust bull market I think we've seen since the 70s. So with all that in mind, you think that platinum's relative valuation to gold, it's actually very, very cheap, even after the 72% year-to-date rise this year. So that's very exciting as a platinum investor myself.
Yes, I think those ratios really help to give some context on where we're actually at compared to history. And so I think that people are definitely now seeing the case for platinum and they wonder, all right, how do I get exposure? From the picture you're painting of the South African miners, sounds like maybe that might not be the direction to go. And I know there's kind of limited companies outside of South Africa that are doing platinum. So is it safest or best to just look at the metal, or how are you approaching it?
I think there are very few and far between quality platinum miners or even juniors. There's very, very few juniors, even less. Outside of South Africa and Russia, which is where the majority of the supply is located. I do have investment personally, full disclosure, in Stillwater Critical Minerals, which are based up in Montana. They've got a PGM complex with a lot of nickel as well in there, which is adjacent to Sibanye Stillwater's project. It's part of the same sort of spin-off, but separate companies. So that's one of the options. Outside of that, there's a couple. There's one in Brazil that I own, Bravo Mining, which were actually also, I believe, at the event, Rick's event in Boca Raton that we both were there at. So there are a few, but for me, South Africa and also Russia, for obvious reasons due to the war, are out bounds. So you're really kind of you're very hard pressed to find platinum names. In that sense, I think, always good to have some physical. Of course, I would say silver and gold first to get your initial positions in there. But platinum definitely is a speculation and as an undervalued metal, great to hold physically. You might consider some ETFs. I think there's a Sprott one. I don't own it personally, but I'm pretty sure there's a Sprott one and maybe an Aberdeen one as well. Might be wrong on that, but there's those options and there's those companies that I mentioned. That's personally what I'm invested in, which is of course not a recommendation.
Okay, so we've got options. If we want to look at platinum, you can go in a variety of different directions. All right, so we've looked at silver and platinum. We're getting to the end, but before I let you go, I do want to touch on gold at least. And there's a reason that we've saved it for last. We're mentioning before we turn the camera on that gold it's not your most favorite precious metal right now. So maybe before I let you go, you can talk a little bit about why that is, where you place gold right now and your outlook there.
Yeah, I mean, this is the thing, Shal. I'm not bearish on gold at this point. I'm almost exhausted from how long that this bull market is going on. I think we all are. We're all kind of maybe slightly concerned at how quickly and how intensely the gold price is rising. I still do think, as we wrote for the Sound Money Report, I wrote an article that about a month ago that said kind of gold is still, could be argued as undervalued. And I still stand by that when you're looking at things like the monetary base, right? And the monetary base has expanded. I think it was in 1980, it was 157 billion US dollars. And today it's expanded to $5.74 trillion. And that's 3,556%. Now, gold in that time is somewhere around 350% increase. So when you think about the extent of that increase relative to gold, you could even make the argument that gold's going to go further. And we're now approaching that round number of $4,000. You've got all this geopolitical uncertainty. You've got an absence of monetary stability with the dollar's continued demise. And it's getting quite concerning now how quickly it's falling. You've got policies in the United States with Trump, who inherently needs a weaker US dollar to make US exports more attractive on the global stage. He is willing on the Fed chair to cut rates, which will initiate further weakness into the US dollar. So actually, a lot of this gold price going up business is the US dollar going down. And when you look at what Russia and China are doing with their shows of strength at these conferences in the world, where they show all their military equipment, which, by the way, looks very, very advanced compared to what we're seeing in the West. There's a lot of reasons why investors are tuning into gold. And I don't think that central banks, a lot of that central bank demand is price inelastic. Like platinum with the catalytic converters, the automakers, central banks are also buying gold, whatever price it is, because they know that it's going to hold its value as a store of value that's naturally scarce, better than an infinitely printed paper piece of, you fill in the blanks.
Yeah, I think this is a sentiment I'm starting to see a little bit more often. The case for gold is, of course, still there, but you might want to be broadening your focus a little bit more when it comes to the precious metals. So really good way, I think, to start wrapping it up. And any final thoughts you would leave investors with? It's clear that you have a lot of different places that you're working right now. Maybe you can also mention where we can find you.
Sure. So I think the overriding theme is that this is now time for performance gold, as we said in the In Gold We Trust report this year. This is time for silver, the mining stocks, to take on the baton from gold and start outperforming, as they already are doing. After that, it will be the broader commodities complex, the industrial metals. That might be a few months down the line, maybe years down the line. But right now, it's silver's time to shine. It's platinum's time to shine. and gold's going to continue consolidating and rewarding investors for their smart thinking. Where you can find me, best places on LinkedIn or on X, Ted J. Butler. I'm writing for various different publications right now. We just started a new one called the Sound Money Report, which you can find on Substack. That's with Roy Surfler. I'll also be writing the silver chapter this year in the In Gold We Trust report for the 4th year running. That'll be now. I also write about specifically silver stocks. Juniors typically or developers below 1 billion market cap, and that's for the Silver Advisor, which you can find on the goldadvisor.com. That's with Peter Kraut and Jeff Clark. And I also write for the Morgan Report, and I have been doing for 3 years. And David Morgan, of course, a silver expert who I owe so much to, an absolute genius of the silver market, and I'm still continuing to do that. And thanks for having me, Charlotte. Really appreciate this.
Of course, and we'll have to have you back soon to catch up on what's going on. I'll include links in the video description so people can sort out where to find you. And yes, thank you for coming on. Once again, I'm Charlotte McLeod with investingnews.com, and this is Ted Butler.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.